Hey, yo, everybody. How you doing? What up? I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer, member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, I think, is the exact same as it was. Day traded some Micron today, but did not keep any of it. Um, all right, so let's talk about it. Overall, pretty strong day. Spies up 0.7%. I actually feel like as I look at that number, we could have been up more today. We closed pretty decently off the day high, that 680 area. But up 0.7% on the day. Q's up 1.3. IWM up 0.5%. TLT is up 0.5%. The dollar is up small. How the metals doing today? Gold gave back some gains. Silver gave back some gains. Crypto, oof. Wow, they closed this negative from where it was up this morning. That's interesting. Ethereum down 0.6. Solana down 0.5%. What's like MSTR look like? Wow, that MSTR daily. Oof. BMNR not so hot either. So interesting day. Interesting day. So um on the one hand, when I think about it, like I think it's very difficult on a day like today for the spies to be up more than a percentage point, because you got vol control selling that begins to come in when you start to be up more than a percentage point. My general thought process, insofar as the potential of any like Santa Claus style rally, is that it acts as more of a grind. The last 2 weeks of December, from a seasonality perspective, have a very high probability of the market going up. I believe, per the Scott Rubner note, um, that we go up 75% of the time in the last 2 weeks. And then over the course of that period, the average return is like 1.6 or 1.8%. So it's like we go up with a very large probability, but we don't necessarily go up like a huge amount into the end of the year. And when I think about that seasonality in combination with the market dynamics, like a grind up would just make sense to me, where you're not triggering any actual vol control selling that might come in, um, but you still just have that strong underlying bid that's coming from retail, corporate buyback bid, uh, to some degree in a flat market, maybe a vol control bid or a CTA bid as they kind of reallocate some leverage as well. So like a grind up would make sense to me. However, like I said, I think in yesterday's afternoon meeting and in the morning meeting today, that's a thesis, right? That's a thesis that I come up with based on studying the data we get from flow of funds and based on studying seasonality, that there's no real reason why this year should be different. But the technicals have to confirm that thesis. And as of yesterday, the technicals were not confirming that thesis. Yesterday was a really nasty candle. We broke down into neutral territory from bullish territory. We really confirmed the break of that like 679, 680 support. The day before yesterday, it seemed like maybe we could tail back up and kind of recapture those levels. But by the end of the day yesterday, it looked like it was shot. And on top of that, when you look at the spies or if you look at the Qs, yesterday really felt like a day one to the downside. The spies didn't even get to extreme downside extension yesterday. The Qs were just kind of getting into that zone. We did have short-term tactical close in the green, but short-term tactical can easily close in the green for like 2-3 days in a row. And my measurement of extreme extension can also last pretty easily for 2 days in a row. Um, Hold on a second here. I need to delete this message. Uh, so Anyway, I would have expected, forget the news for a second that hit this morning and last night. I would have expected technically that we would have gotten downside technical follow through on today's trading session, and the question just would have been how much. Then, of course, the best way to change a technical picture is news coming in that shakes things up. And we had Micron report just like the most incredible earnings report. Um, uh, I read Charlie McElligot's note that got posted today that he came out with today. Maybe we'll be able to get it in Pat's note or parts of it in Pat's note tomorrow morning. But one thing that he mentioned in the note was that Micron's earnings are basically the best tech earnings that have come out since the original, and I remember this one, the original NVIDIA earnings report that kind of set off this entire thing, which was back here in May 2023. You can even still see it on my chart. I don't even need to zoom in. That massive, massive gap up in NVIDIA that set off this entire thing. The Charlie McElligott note basically says, the degree of the beat in Micron is just so insane. The only thing that you can compare it to in the relatively large tech space is basically that NVIDIA report. So you had Micron report the way that it did yesterday. That's after, the AI trade was really beginning to flounder with how AVGO had been trading and with how Oracle had been trading. And it really seemed like it saved the day. I felt that when it came to the AVGO earnings report, you had to really kind of reach to try to find something wrong with it, like really reach. And basically all you could come up with is that, hey, the year out revenue guidance like just isn't quite good enough. And again, I think that's a reach. Obviously, that was enough though to look what the stock has done since then. The stock has just been an absolute slaughter fest since reporting what is overall an excellent report. You had to reach to be able to find, okay, maybe the full year revenue guidance isn't that good considering how good next quarter's revenue guidance actually is. It's basically what people were saying about AVGO. You look at Micron, I can't find a single fault with that. And I kind of agree that that might want to be across the board on EPS, on revenue. I think it beat like the street's expectations on EPS by like 75% or something. Like the numbers are just so astronomical compared to what expectations were. The only thing you really can compare it to is that NVIDIA report from May 2023 that we were just looking at. And at the end of the day here, even with that good of a report, Micron's only up 10%. And it's not a fantastic looking daily candle. I don't know how much Nvidia was up on that report back in May 2023, but I can promise you it was more than 10%. And I'm pretty sure we closed on highs and it just sparked continuation from there. So I would argue that considering how fantastic that report was for Micron, it actually still isn't the best reaction in the world. It held 260 resistance. We actually had one decent little trade in this, not to get off topic. I started a little bit too early. They didn't make it super easy, but eventually into this equilibrium zone on this pullback, you had this hammer that came in and it created a nice bounce. I got out of my trade into the final leg of this move here, higher just for a day trade. But all the same, just when the market is looking like really bad technically, it's technically breaking after yesterday. Micron comes in to save the day, and on top of that, we had a CPI come out that was light compared to expectations. I actually still don't think it was a great CPI. If you dive into that month over month number, um, what that translates into like a year over year number is inflation that is still a good bit hotter than what the Fed's stated kind of number is for their mandate. So we're still trending around 3%. They want to be down around 2%. We still did see a little bit of some hawkish commentary coming out of Goolsby today around that as well. But all the same, it came in light compared to expectations. So no disaster there, and it obviously helped to really continue to boost the market up. Let's pull up the 5 minute chart of the spies here again really quick and look at it in conjunction with the pre-market. So the pre-market starting point here for the spies never got breached. It's around 674.50, but We definitely didn't close as well as I would have liked. The game plan for this morning, which, to give ourselves a pat on the back, I think that we traded the open like really, really well, all things considered. We talked about initially fading the gap because of how big it was, but being aggressive in your profit taking to take the majority of it off by the time we're working towards the ADMA. So if you put that trade on, we were calling out, hey, book all your profit basically in real time at this low. And then we discussed as this pivot came in here on the next bar that you could go long versus this bar. And that if you're trying to be a real bull and go after the bull narrative because of Micron and because of the CPI, then this low here is your spot to go after. So perfect, cute little short leading to a perfect call out on the long trade. The pullback here doesn't break the opening low, and then you got great continuation to above 680. Eventually, we made a new low, but big picture, um, what I really wanted to see to improve the technicals is the spies getting back above, ideally on a closing basis, at least 679 today. That is what would change the technicals, I think, to confirm the narrative around the bullish seasonality, flow of funds, Santa Claus, all that great stuff into the end of the year. And we couldn't do it. So these technicals, when we're looking at the technicals here on the spies, they're still not great. They're still not good enough, honestly, in my opinion. So if you want to be really looking for that Santa rally, you need these spies to get and hold above 679 to 680. And honestly, they had every reason to do it today and couldn't. And that's a concern. If we couldn't recapture that level today off of those two things coming out and being part of the bullish narrative, are we going to be able to do it? So I don't know. Is the bottom line. I think it sets things up for a little bit of a tricky end of the year to correspond with a lot of this entire calendar year that I actually has felt has been kind of tricky in a lot of different spots. Where it's like I still don't really want to be fighting this bullish seasonality between now and the end of the year, but I also don't want to be fighting the technicals that are looking a little bit broken after failing to recapture key levels when they had every reason in the world to do so between Micron and the CPI. So I would say that today's close today is just not good enough. It's an inside day for the Qs. It's not an inside day for the spies, I don't think. So the Bulls do still have a chance here to be able to give like an inside enough for the Qs, get back above the high from the negative Maribozu from two trading sessions ago. If the Qs do that, then most likely the spies are doing that as well. So the Bulls still have a chance. But at this point, from a strategy perspective, I would say that if you want to be long because you're looking for the Santa rally or whatever, let the price action come to you. Show that the market can actually recapture those levels and then look for the longs when you're getting the technical confirmation, and don't force it when the market's not there yet, because even if there's a very, very high hit rate, it's one of the best hit rates of seasonality at any point in the entire calendar year at around 75% for the last 2 weeks in December. Well, 75% still means 1 in 4 where you don't get positive price action in those last 2 weeks. So it is not impossible for us to go down. And I just would want to see the market technicals confirm that we can be above 679 to 680 before I really start to layer into things a little bit further on the long side. So I think that's where we're at on the index level. Again, as far as individual stocks go, I was just very, very focused on the market. We already talked about the trade setup that we were kind of calling out at the market level, the trade setup in Micron, and that really was my complete focus. I know I had a couple of things on my list this morning, but I never traded them. We're looking to see if KRE can continue on this bull flag. I got some concerns about the extension from the 21 EMA. Same thing with XLF. Wanted to see if this could continue off of its bull flag, but got some concerns about the extension on the 21 EMA. Yeah, things just didn't close well enough. We thought fuel cell for maybe a breakaway gap above 9 as a trade. We're looking at Merck for maybe some continuation above $100 as a trade. Apple was still not that great. Amazon's still not that great. Google needs to get above yesterday's high. Someone to the market to look better. Meta 660, we were looking at for a little bit trade. Honestly, Microsoft, which we mentioned in the morning meeting, was one of the best ones off the open for the long for continuation above 480. I think at one point, Jim had mentioned this Reddit, just seeing that this Reddit rolled down pretty hard, though, at some point during the day. Um, so yeah, that pretty much covers it. AVGO continues to be a focus. Also continues to just really, really struggle to get out of its own way. Gapped it up really big, and once again, just wrecked this thing on that gap up. Absolutely wrecked it, and tried to stabilize, but was just so relatively weak compared to the market. So I guess that kind of covers all that I've got. It felt like a really exciting trading session. There were some big movements today in terms of the opening pullback, the opening bid low, the break of 680, then this seemingly random heavy, heavy sell-off that hit around noon, which I still don't know what caused that. It didn't seem like any news came out really at that time. But all of a sudden there was just a massive downtick in the market. I know at some point we saw that the EU is probably going to stop easing and stop cutting rates, but that's probably just as the United States is about to take over with their easing and their rate cuts. So uh, you do want to pay attention to, I think, because it impacts the U.S. market. Um, the global amount of tightening or easing that's ongoing in the entire world combined. Obviously, the United States is what's most important to us, and don't fight the Fed and everything else. But to some degree, what's happening globally actually really also matters in terms of tightening, easing, and money supply. And even though the US Fed has been slower than the rest of the world to cut rates, there is still a positive impact on U.S. markets of the rest of the world cutting rates. So we want to pay attention to that. And that headline that came out could actually be, not great for the market. But I think that the United States is going to probably pick up where the rest of the world left off. That's all I got. Happy to turn it over to you guys. From Billy, micro on the problem is the challenge of meeting demand. Yes, 100%. They have a supply problem that some firm addressed last week. Their raise is all dependent on if they can actually make the drams. So my understanding on the guidance was that that guidance that they provided was even including the fact that they can't meet the actual demand for their product. That my understanding from what they were saying was that they would have guided even significantly higher than the insane guide that they provided if they felt that they could meet up with demand. So my read through, and maybe I'm wrong on this, is that that guidance is that's guidance in recognition of the fact that they can't even keep up with the demand that's coming from their product for their product. But yeah, I mean, just either way, it's an incredible number. Here, seeing Greg saying the rev guidance of 18 billion is reachy, could feel speculative and is all business to business based, and that matters for sure on data center build outs and AI capex in coming months. Yeah, so like everything else, the market is suspicious of the narrative. So that's probably the reason why Micron was only up 10%. Flip side, the demand for memory is overbooked and real. Micron, Samsung, and Hynix, I think that's how you pronounce that, have monopoly on the product. Yes, yes. And I think you hit the nail on the head there. The market is suspicious of that business to business business. Suspicious of that narrative. And again, that's probably why Micron was only up 10% on that report because it's the same thing with Oracle, which I think is a worse situation. OpenAI, does it all come to fruition or not? And I think that the market is discounting that it may not be able to, and probably rightly so. And otherwise Micron should have been up 40% on that earnings report, and it was only up 10. From Eli, this was something that I was thinking about recently. Sorry, 1 second, I got to fill on something. This was something I was thinking about recently. What are the ways you can pinpoint the weakness in a system of trading? For example, you can track metrics like risk reward, Sharp ratio, and WR. What is WR? Uh, but but what that Sorry, but what about when the market environment changes? How can one learn to maybe adjust entries, exits, and scale out based on how the market dynamics shift to maximize those metrics, or at least to just mitigate risk? Sure. So it's a great question. I think we talked about it briefly in a recent afternoon meeting about how one of the more difficult things for any trader who's a little bit more experienced is market environment changes, because it's like you do all the work, you figure out what you think works, you're starting to put it together, you're starting to make some money, you start to think about how much bigger those numbers can get based on the success you're having with adding more scale, and those are great thoughts and to have and great thought experiments to have. And the next thing you know, the market environment changes and what you were doing isn't working or isn't working as well. And that's why and how you want to be able to have like a little bit of a tool belt of different types of trades and approaches that you can have, and not necessarily just have a one size fits all for the market. And then it's up to you, in order to maximize performance, to be able to recognize based on your statistics or whatever else, that hey, all of a sudden my statistics are showing me that this strategy is not working as well as it had been previously, so therefore I need to adjust to one of my other strategies, which doesn't necessarily mean to stop using the previous strategy entirely, but maybe be a little bit more selective with it, do a little bit more less size, and or utilize other approaches in a greater detail. Um, so that would be probably my direct answer. It's very hard to have kind of a one size fits all approach that you could use in the sell off in February, March, April this year that will also work in the heavy snapback up in um, April, May, or in a more range bound market like we were dealing with in September, October. I don't think it's impossible, actually, but it's difficult to kind of have a one size fits all approach to every single thing. Or if you do, like, I kind of feel like I solved that a little bit for myself with my cash flow strategies and the build in, build out strategies that you have heard me discuss, because it kind of to some degree does work in any environment. And then the biggest thing is toggling overall exposure and overall long versus short exposure. Um, so I hope that helps. And again, some of that cash flow stuff I do works pretty great in most environments. So don't be afraid to use it. Dennis, Mike Bellafiore. I don't know what you're saying. In this market, focus on cash flow trades, reduce risk, be more selective, scalp, take profits quicker, zero tolerance for sloppy losses. Okay. Not sure I agree with that, honestly. I do think in certain environments when the volatility really increases, you need to sometimes be a little bit more selective, have a little bit lesser size. I don't necessarily agree with that on this current environment. From Jackie, a couple questions for me. Number one, was there anything that you stopped doing in your trading early on in your career that mattered most for your trading? Like, was there a behavioral habit for you to break when you first started trading, and how did you break it? Yeah, fighting stock. Fighting stock was a big one for me that I had to break. Um, it's almost naturally part of my personality. I mean, I'm a retired professional fighter. I and I'm also super competitive. So like anyone else, I don't like taking losses. I think that my ideas are always right, and it can lead to a habit for me of fighting stock. And by fighting stock, what I mean is, and there's definitely a period of time earlier on in my career where this was a real problem for my P&L. Put the trade on, stop losses at 20 cents, stop loss triggers, take your loss, Stock drops to 16 cents. Next thing you know, it's back at 28 cents, 8 cents above where you got stopped out, maybe 10 cents if you include some slippage. And I'm saying to myself, I knew my idea was right. Dang it. It's back above where I got stopped out. It just shook me out. It just needed a little bit more space. And then I rebuy the stock at 28 cents and I put a new stop loss in at 15 cents. And then I get stopped out at 15 cents. And then it puts in a low of 12. And then it goes back up to 20. And I go, dang it, I knew my idea was right. And I rebuy on the offer at 21. And I put my new stop loss in at 11. And then it goes down and triggers my stop loss and puts in a new low of 6 cents, and then it begins to uptick again. And I go, oh my God, I can't believe they got me. I'm going to put the trade on again now with 3 times as big a size because I just got turned in this thing 4 different times. And now my trade is definitely going to work. Look, it's already working without me. And then I rebuy the stock and I put the stop loss in and I get stopped out again. And then I'm locked out for the day. All on one trade that I fought and got into and out of 7 times. And then if I looked at the actual numbers, if I just bought that first time at 20, 25 cents and gave it 25 cents worth of room instead of 5 cents worth of room, I would have lost more money. I would have lost less money, I mean, on the wider stop loss than I ended up losing ended up losing even more because I got stopped out, rebought a higher price, got stopped at a lower price, rebought a higher price, got stopped at a lower price, and did it 4 or 5 times. So that was definitely something that I was doing at a certain point fairly early on in my career. And I was driving myself crazy about it. And then I'd be so angry when I was locked out after fighting the thing for four times. It was just really bad, trading, bad psychology, bad kind of everything. Um, so that was definitely really one, and it, made a big difference on my trading when I was able to stop. You need to understand your trader personality. I know we've talked about this in the past. Some traders are, just to give you a couple examples, some traders are really really good at making money when they're already making money. Some traders are the opposite. And I've actually always been more the opposite, where when I'm making a lot of money, I get too loose with my risk, and I get too I lose my selectiveness because I feel like everything's going really well, and then I'm in not as good trades. So I've always been a person who actually, when he's up a lot, doesn't do as well. And the flip side is also true for me and different for other people, where some traders out there, they trade really badly when their P&L is negative on the day. They start getting in their head, they start taking shots, they start taking too much risk, and they can turn like a down small day into a down big day really, really quickly. I've always been the opposite in that situation also. I've always been really good. I've always actually been better at making a comeback than I have been building on P&L that I'm already making. So, that's just all knowing your trader personality, because you need to create rules based on your trader personality. If you're the type of person who, like I just said, finds himself down some money, and then you start taking bigger shots with more risk, and you easily turn down small down days into very big down days, that means that you're the type of person that needs to have rules for him or herself where you are keeping that downside like very, very tight. And no matter what, you're keeping yourself a small limit down. When you're there, you're done. And you stop because you're going to make it so much worse if you continue trading. But on the upside, that's when you push things. So it's just knowing your trader personality. Or another thing about fighting stock versus not fighting stock, for me at that point in time, it was really important that I had to make a rule for myself where it was, one trade gets one shot. But look at Pat. Pat is great at putting a trade on, taking a small loss, garnering information from it, not fighting stock, but then recognizing after he's garnered a little bit more information when the opportunity comes back in, and then saying, "All right, this is the new opportunity, this is the new execution," and Pat could let himself, sometimes get stopped out a couple times, and then actually really be able to, capture that trade on the third time. So Pat's trader personality dictates different rules for himself based off of what he is really good at. So you need to know those things. But that's the answer to your first question. Your second question: do you believe that as traders you need to have a detachment from money to be successful? And if so, what do you think the best way is to do this? I don't know. I've got mixed feelings on the question and on the answer to the question. Because in some ways I feel like it's too easy to become too detached from the money. Like I can tell you for myself, like the P&L on my screen is like not real to me. Uh and I genuinely don't know if that's a good thing or a bad thing. Um if I like had to go to the bank every time like I don't know, made or lost 10 grand or something like that, then maybe I would trade very, very differently than I actually do. Maybe it would be better for me. Maybe it would be worse for me. I don't know. I used to have these chats. It was a very common like idea and chat that I used to have with some people back in the day about like what if you every time you're going to take a trade and risk $100 on that trade, you had to physically take $100 cash out of your wallet and like put it down in front of you so that you could see it? Um, would that make it more real to you instead of just some numbers on the screen that would make you take risk more seriously? Um, so in that regards, I almost think it's the opposite. I think that the fact that we just are looking at a screen with numbers moving up and down overly detaches us from the money, makes it feel like it sometimes isn't real, and then you could be making or losing money that's a real amounts to you, and treating it more nonchalantly than you probably should otherwise. Um, the complete other side of the argument, which is maybe a little bit more of where you're coming from, is money is something that naturally inherently brings about emotion, um, because of its meaning and what it does and how much we need it and everything else. And emotion in trading is bad. So uh it can be so easy to get like really angry, go on tilt, etc. um because you're making and losing like actual money here. It's why uh I've seen so many demo heroes who were terrible traders, and it's why I could care less about a trader's performance on demo account. Genuinely could care less, because congratulations, you can make fake money. Now show me what it looks like when the numbers are actually real across the screen. So I don't know. I'm struggling with your question a little bit. I think it's a great question because it's bringing up like some conversation and some thoughts. Um, because it's like on the one hand, I feel like the screen can make it not real enough. Feel like it's fake, but on the other hand, money naturally coincides with emotion, and that's bad for trading. So I don't know what the perfect answer is um on this one. And it might also just be another one of those things circling back to the trader and the trader's personality to some degree. What is the impact of it on you? Like for me, yeah, what Eli's saying here, I think is pretty accurate. It's probably more based on the individual. I could tell you probably for me at my point in my career, if anything, I have the opposite problem. I'm overly detached from the P&L as it moves on the screen. Um, as a defense mechanism for some of the big swings I've had in both directions at this point over my career, I really don't know. It probably should be more real for me. But for other traders, it's probably the complete literal opposite, where and I remember this as a newer trader. Like the first time I lost $700 trading, I was like so upset. I was brand new trader. I was in the first couple of weeks or whatever of my career. I remember it vividly. I lost $700. A lot of it was through slippage. The market was moving really fast. It was right off the open, and it was in the stock FFIV. FFIV got me really bad, and it was so emotionally charging and painful of an experience to lose that $700. Which is crazy because my P&L since I've been talking to you guys has moved $700 five different times, um, or more. Uh, uh, I don't know. It probably depends on the person, and where you're at. So. I hope that helps. From Bruin, we had like two cell programs go off today. Were there any news related mid session in the close? No, I didn't see any. I did not see any on either of those. Just the one EU thing I already said. That the EU is probably not going to be cutting rates anymore. From Dennis, super interesting. You see a bit different. Could you elaborate on that? Because this is also how I have adjusted recently, simply because we are trading in a range for a while, and it's also been very good for my own trading. I think the question is more related to like different trading environments. For me, the cash flow kind of approach that I have loves ranges. The more volatile the range, the better. Like honestly, I was thinking about it at a certain point today, and related to what Varun just said about the cell programs. I would do anything to have every day be like today. Just how big the movements were in either direction, where it was like, off the open, I was buying all the way down and then selling all the way up and then buying all the way down and then selling all the way up and then buying all the way down and then selling, like these huge ranges where we don't actually go anywhere, but there's a ton of volatility with us not going anywhere. For my one strategy, kind of helped me print money. And you've been around long enough, Dennis, where you understand, or you should at least understand, because I've talked about so much in afternoon meetings, kind of exactly what I'm doing there. If you don't, you can go back to the Mike Reed spreadsheet and click on the appropriate links. But for like these like go nowhere yet choppy volatile sessions that honestly a lot of traders struggle with, in some ways they are my my favorite environment almost. The more volatility with us going nowhere, the better. What I don't like is us going nowhere and being super, super, super tight. I don't think anybody likes that because then there's just, I'm not making money off my cash flow ranges. You're not making money off of trend directional movements. You're not making money off of momentum directional movements. It's just nothingness. From Greg. There must be a camera in my office on that one. Hate stops for that reason. I find that switching names from Teachable Q to like NVIDIA or MU or whatever, which is similar but psychologically different, helps with that. Yeah, I like that. I like that advice. So back to like fighting stock. Um, Change the symbol maybe, and it's gonna trade similar but different. You give yourself like a little bit of a reset. I like that. From Mustafa, when you enter a trade, let's say you caught the bottom, but we are not sure if it's not the bottom of the day. Would you add to your position on the way up? When do you add? If you don't add and book profits to cover more risk, would you say it's better that I enter with a larger position to be able to make money when I cover half, which would mean my entry should be perfect or it fails? Or would you rather enter a small position and leave room for your stop loss and just give away the desire for making more profits with a larger position. I notice you always focus on 5 minutes regardless of entries. Do you consider the 1 minute to time the exact bottom? Sure. So a whole bunch of questions in here. Um, and within the confines of your question, you kind of described what I think is kind of like, in some ways, the three major approaches that you can have towards trading. And then there's all different, sub strategies kind of beneath that. But basically, you can have an approach where you start positions small, see that they're moving in your favor, see that the trade is working, and then add when it's working in your favor. You can have a strategy where you take a lot of size all at once with a tighter stop loss and then you get paid really well when it works, but it's kind of all or none. You need to be right away or you're getting stopped out. Or you can have a little bit more of a build-in approach where you're going to start small, you're thinking bigger picture, you're recognizing that as you're starting small, it could move against you, and you can build in a little bit. I can tell you that for myself, I guess I do all three. And everyone, it depends on the specifics of the situation, and it depends on the specifics of the trade, and it depends on the game plan that I create for myself on that trade. Traditionally, I never did very much adding into winners. Traditionally, I either did either the second two options, taking all my size all at once with a tight stop loss, or taking in more of a build-in approach. Probably what I do more than anything, honestly, is a build-in approach. A little bit more recently, I've actually been working on adding as the trades work. I spoke about this with the quantum names when they peaked up here. And that this, was after many years of trading, me still improving as a trader, where, like, I was short RGTI, I think initially with like a target in the low 40s. And then I was able to, at a certain point, like add to the position on the way down to push for a deeper target. And then I did that probably like 3 or 4 times, where I first got in this and was just looking for a move to 40 and ended up having stock all the way down to 20, I think, on the short. So it was like just a really, really good trade that didn't keep this one a lot of the time. But additionally, we've been good at kind of capturing these parabolic tops, but capturing the parabolic top for a move just down to the 80 MA. But what I was saying at the time is, like, with these bullshit companies, so many times over the course of my career when I've seen them go parabolic, I get out at the 80 MA on the daily, and then I forget about the stock, and I look back at it 3 months later, and it basically went to zero. And wow, imagine if I just continued to push this thing and I made the next $40 a downside. Um, so in this trade in particular, I made some real improvements for myself where I was able to do that. So I definitely think it depends on the situation, and you need to develop game plans for yourself based on the situation, because it's not a one size fits all. In this trade, what I just described, which is something that is probably of the three different approaches you're mentioning, it's what I've done the least. Um, it worked great for this particular circumstance. In a lot of other circumstances where you're doing that and you're adding up, you're going to take a trade that's working and you're going to be adding at highs, and then you're going to end up losing money on a trade that worked for you well enough that you easily should have made money in it, but you added up because then you thought it was working. That's why, by the way, traditionally I never liked that approach. Traditionally, I never liked that approach because it circles back to what I was talking about, just the other day about I don't like to buy day twos. When you're buying a day two, you're adding on the way up. I want to be involved in the catalyst of the break. I want to be anticipating the move is going to occur and not reacting after the move has already occurred. Because when you're reacting after the move has already occurred, you're getting a worse risk reward and you're having a lower probability of success. And if you're chasing stock at that point, you could take an easy winning trade and then turn it into a loser. So I traditionally have never been a big fan of adding up or adding to winners as they're continuing. But I do think that there are some circumstances like the RGTI situation, QBTS situation that I just went over, where it makes a lot of sense to be able to do that, and you can continue to push and push and push that winner. Um, I love the idea for newer traders of focusing at least initially on like the one size takes all, where you're coming in with a larger amount of size, one singular clean stop, very very defined risk, and then you're either getting stopped out and you're losing your 100 or 200 bucks or whatever, or your trade is working and you are, you know, making hopefully 3 to 10 times the amount that you risked. I think that that is probably the best place because it's the least complicated for newer traders to start. And that's, kind of what I recommend for newer traders. But I honestly also don't think it's the best approach because the way that the market works in the modern market, and it's one of the things that makes trading so difficult, is that I feel like a lot of times I can tell you about where a near term top or bottom is going to come in or a retracement is going to occur. A lot of times I can tell you about where it's going to occur, but nabbing the execution so perfectly with that, and honestly we still did a pretty good job of it. We did it today on the market off the high and off that opening low. And that would be great for the newer trader trying to implement that second approach. But there's so many other circumstances where it's like I feel really confident and I end up being right about the approximate area where that pivot's gonna turn, but they like push through it. I mean, it was basically like Micron today. I started a little bit too early. Felt really confident after that earnings report. Now we're 1, 2, 3, 4, 5. I think I started on the sixth red bar here, sixth red 5 minute bar, as it was now into this equilibrium area and into the ADMA, knowing that at some point here I'm going to get some degree of a pivot higher in this stock, feeling extremely confident about it. But is it going to happen exactly at the ADMA, the midpoint between the 8 and 21 EMA, somewhere a little bit above or below that? Much more difficult to say. And I guess if you were super patient, well, honestly, if you were super patient, I think you would have had to have tried this 3 times, maybe even 4 times before you actually caught it. Where if you're just doing the one entry, one stop loss, you probably would have gotten stopped out 3 or 4 times before you actually caught it. And then that circles back to the whole earlier conversation we're having about fighting stock and everything else. Or for me, what I was able to do was I started with a position maybe around 252 or a little bit underneath it. That was a big enough of a position with initially a 260 target on the trade where I'm going to make a few bucks for myself. That's going to be good enough if I just nab the low to the penny and it goes up to 260, but also not so heavy that I couldn't build in a little bit deeper. And I built in and I built in, and at one point I had an even heavier ad here, like maybe 247 or 246 and change. And that's when the low actually came in, caught the move, worked it per my game plan, which also meant that I ended up reducing my target a little bit over time to 258. It got to 258, I got out. So I that's my favorite way to trade, is more of a build in, build out approach, but it's not necessarily right for everybody. Um, it requires a certain degree of risk tolerance, and it can be very dangerous because if you are, and I made this mistake literally yesterday in SOXL. If you get too heavy too early and you're trying to do that approach, all of a sudden you can find yourself down a lot of money very quickly, and it's very very hard to actually define what your actual dollar risk is. So that's my favorite way to trade. Um, but I don't necessarily recommend it because it's very hard to define your risk, know how much you're risking, and sometimes if you're not sizing properly, it can just be a really difficult trade. So the kind of, I guess the answer to your question is really all three approaches. It depends on the circumstance. Your question on time frame of charts, I never look at anything less than a 5 minute. And technically, I have a 2 minute. I very, 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 very rarely will reference the 2 minute just because I want to see what a tick price was that I missed in the tape. I hate charts that are less than 5 minute. I think that they're way too noisy in there. Um, I like fives and 15s for execution. Nothing less than a five. Anything less than a five, I'd rather just be reading tape. FFIV and ACAM were the original cloud companies. Yep. That was probably back in 2010. I took that $700 loss. From Jim, I think one of the bigger hurdles is getting over trading sums of money that are meaningful to you in real life that could pay your mortgage bills, etc. I think you have to detach to get past that and get bigger. Yeah, yeah, for sure. I joke around sometimes, I just lost a down payment on a house today. But yeah, for me, circling back to that question, it is if anything, for me in my stage of my career, I'm too detached, and I should probably be working on making the money more real to me. From Varun, did you say that news came out saying that there was no more rate cuts in the EU? Is what came out. There's probably going to be no more rate cuts in the EU, not in the United States. There will be more, most likely here in the good old U.S. of A. Uh, how did I determine my price target on Micron? So originally my price target was 260, which I didn't have a great reason for, to be totally honest. It was just kind of back into the opening range, and then one of the things that I do in certain circumstances when trades go against me is I have which this did go against me a little bit from where I first started, is I have a system, uh, going back to kind of the build in, build out approach, where as I make some money from cash flow, I use the money I made from the cash flow to reduce my sizing. And inherently, by reducing my sizing, it's reducing my target price. But I am doing that for risk management purposes because the trade had gone against me a little bit. So I'm not a genius on getting out at 255, 258 a micron today. I got lucky. It was just that I had reduced enough sizing where I was now only going to be getting out at 258 instead of 260. And that is exactly what my game plan called for me to do in that circumstance. So, that's the answer to your question. Not a great answer. I wish I had like, the technical blah 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 is the specific reason for the 258 target. It's not. It was more just game planning based, and it's back to I just I want to make this note that I've made recently, and I want to make it again just because I think it's really important. We spend a lot of time, for a good reason, talking about technicals, chart patterns, trigger entry points, idea generation, flow of funds, market dynamics, fundamentals, technicals, everything. Um, at the end of the day, what TT just said is the most important thing. I really think that the most important thing in trading is the math behind the game plans that you're establishing for yourself and how they can create consistent profitability for you more so than the actual technicals. So the reason why I got out of 258 and not 260, the reason why my price target was 260 to begin with, is entirely just based on math around a game plan where my focus in my trading is that I know that when I put trades on, I'm going to have trades that either work or don't work or some degree of the in between. And I want to make sure that I can, be having game plans that make it so that I can make the most amount of money with losing the least amount of money. And at the end of the day, it's really just about working very, very hard on developing ways to build in, build out, execute strategies, whatever, where it's entirely based on the math. And it also circles back to Mustafa's question about how um, I think that you got these different approaches. Start small, building against you. Start small, building as moves in your favor, or get bigger and trade with the clean stop loss. I actually don't think that the most profitable way to trade is to trade with just very clean stop losses. Take the entry, 1,000 shares, 10 cents risk. I'm going to lose $100 if the trade is wrong. I don't think that's the most profitable way to trade, but I do think it's the best way to trade for newer traders or smaller traders, just because they just don't have the experience enough yet to do what. Here, let me throw out my T triple Q chart so you can see my executions today. Um, if you've been trading for 2 weeks, you're not going to be able to make a Christmas tree like this. It's just not going to be physically possible. It just, a lot of experience, a lot of thought around game plans and executions and things like that. From Mustafa, regarding the MU trade, did you take any profits after that first pullback? Going all the way to 258. I tend to take most of my profits when I see sign of a fallback, so I miss most of the good move. Is there any way to have conviction and just and to have conviction that it's just a pullback? Yeah, so I think that what you're describing to me is exactly what I try not to do in my trading, which is make decisions in the moment when I'm already in the trade about what I think you can do next. In truth, once I'm in a trade, I'm already in the trade based on a thought process of what I thought that the thing could do. I don't adjust. I don't want to adjust, and I don't think that I, as a human being, can be objective enough to adjust, because I'm seeing my P&L move, I'm seeing a quick downtick in the chart, I'm seeing a quick uptick in the chart, and I don't think that I can be consistent. I just don't think I'm good enough. I don't think I'm good enough of a trader to be consistent enough to be able to make adjustments on the fly on game plans to be able to make money. So everything that you kind of just described here, I take most of my profits when I see sign of a fallback. So sometimes I miss the really good move. Is there any way to have conviction that it's just going to be a pullback? No. But I'm not going to be more greedy when all of a sudden I think that the trade could really, really work, and I'm not going to take more profits when all of a sudden I think that the thing might pull back. I have a game plan from when I got into the trade based on my original thought process. I follow that game plan until I'm out of the trade. Whether the thing went against me, for me, somewhere in between, that is exactly what I do. So I mean, here's MU, right? Here is me doing exactly what I just said to you guys before when I didn't have the execution dots on, starting on the 6 bar down, starting into the 80 MA on the 5-minute chart, starting with enough stock here with a 260 target where I could make enough money if I caught the bottom and it just really goes here, but also being light enough that I could build in. And then at a certain point here, as I just described, you can see the extra kind of green dots come in. That's because I took a little bit of a bigger add to the position based on the pivot itself actually starting to come in. And then I just worked this in $1 increments basically per my strategy. So every single time it pulled back $1, I reloaded some stock and sold it $1 higher. And that cash flow in between is putting money. They're all limit orders. That cash flow in between, except for this add-on buy and my first buy. My first buy is not a limit order, and the add-on buy is not a limit order. Every single other order is a limit order. Um, and then the cash flow in between is what enabled me to basically reduce my target by giving myself a couple, which you can't even see in the dots. A couple of these dots are double sized. Excuse me. A couple of these dots are basically double sized because I was taking money that I already made and saying, all right, like this extra money that I just made would be the same P&L as if it went to 260. So therefore I can lower my 260 offer to 259 because of this extra money that I just made. And now I just made a little bit more, so I could take my 259 offer and put it at 258, and I can put my other 259 offer in 258, and then my 258 offer at 257. So there's a couple fills here I can't tell you exactly where that we're actually double sizing on the move higher, all per my game plan. And yes, the game plan enables me to primarily utilize limit orders in my trading, and limit orders are great because limit orders mean that I'm not paying a spread, I'm not making random decisions, and I'm getting ECN rebates on all my executions. And that is why, occasionally traders will reach out and they'll be like, "Hey, Derek, how come I pay so much in execution costs?" And the first thing I do is I look at their ECNs and I see, wow, this guy hasn't provided a single 100 shares of liquidity the entire month, and he paid all this money to the ECNs for taking liquidity. And then I go look at my own prop reports and I see that I just got paid five figures over the course of a month or whatever, a quarter, I don't exactly even know, in terms of rebates because I provided liquidity on over 100,000, sometimes more than that, shares per day, on my trading, and it adds up dramatically. What if MU kept dipping and never gave a pivot back up? Is there something in your game plan to account for that since you don't have a physical stop? Yes, what is in my game plan to account for that is exactly what I just described. That's enabling me to bring my target down and sell stock at lower prices than what I was originally talking about. If Micron were to continue to sell, then I'd be, bringing more offers down and more offers down over time, and I would work out of the position. The fact of the matter is that yes, you can get momentum movements in stocks where they rapidly go up or rapidly go down. I mean, look at the down move in the Qs here at 12:05. And now let me try to pull up my execution chart and we can look at what I did in that 12:05 candle. Look at that. Buy, 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 buy. The dip just kept on dipping. The dip just kept on dipping, exactly like you're talking about. But we're talking about an index here. I'm talking about Micron on one of the greatest earnings reports I've ever seen. Eventually, there's going to be volatility. Eventually, there's going to be a pivot. The volatility, the pivots, that in the right circumstance per my game plans can enable me to work out of those trades and eventually take losses on them. And it also, but your question is exactly the right question because it circles back to what I said to you earlier about your question, which is I love a build-in approach, but generally speaking, I can afford it. I don't like the build-in approach for new traders because you do not know exactly what you're risking on the trade. And if got a small account and you're a new trader, you need to know exactly how much you are risking on the trade before you put the trade on. Or you're going to end up getting caught in something that blows up your entire account. So I prefer that approach for smaller traders, newer traders, and again, we still do a fantastic job, even though I don't do a ton of trading this way. I do some of, here's the pivot. I'm buying the stock, stop lossing at the tail low. Let's go. I don't do a ton of that, but we call out enough of those that work pretty perfectly, and plenty of others where you're going to get stopped out, but enough of those that work pretty perfectly that you can be doing that as a trader with us, even if it's not the approach that I overall want to be implementing with my own trading. And then this also circles back. Now I'm standing up. I know you guys can't see me. This also circles back to, a previous conversation that I've had with you guys in the past about these afternoon meetings, where traditionally when I was doing these afternoon meetings, my focus was only teaching what I thought was the right thing to do, and not necessarily showing you guys or talking about what I do, because sometimes they're different. And now the approach that I've been taking for the last several years now is an approach where I try to do both, just in being to be completely honest. And I think it benefits people more this way. I try to be honest about what I think the right thing for most people to do is, but at the same time talk about what I actually do for my own trading. And by all means, I'm by no means a perfect trader, right? Definitely take my losses, and I've said it multiple times in the last couple of weeks. It took a massive hit at a certain point this calendar year, for a couple months there, had a really tough couple months. But is what it is. Part of the business sometimes. Wow. From Tim, I'm getting better at being patient and waiting for setups to play out. I don't have problems with entries and sticking to my stops. My biggest issue is taking profits. I start scaling out for pennies and the trade continues to go. I don't FOMO, but the small gains take multiple trades to build, and a couple losers can set me back. How can I get over this hump? And what is the process for scaling? You need to have better game plans for reward maximization, is really what it comes down to. So, most of the time when a trader is not successful in this business, I would say 9 out of 10 times when a trader is not successful in this business, they're not successful because they don't manage risk and manage money properly. The other 1 in 10 is because they don't maximize profits. You are having that second problem, and we don't want you to be that 1 in 10. We want you to be a super, super successful trader with us. So you need to have better game plans in place for reward maximization. Is basically what it comes down to. You need to know when to be really greedy. Um, I think we talked about it enough. So just try to adjust the game plans. I'm a big believer in booking some profit really quickly to cover your risk, because that booking of that profit quickly to cover risk is not about making money. It's about risk management. I'm a big believer in, especially for counter trend trades, taking more off the table relatively quickly at certain target zones, 80 EMA, 21 EMA, etc. Once you get that, the risk covered sale plus target zone number one sale, um, between that alone, now no matter what, you're going to make money in the trade. No matter what, you're going to make money in the trade. I want you now to have small winners because the trade now entirely failed and went down and stopped you out. And then when the trade then really works, like you're saying happens sometimes, that you're not just selling more. That last stock, after you've covered your risk and taken off a little additional profit at like the first or second or both target zones, that last percentage of that position, that's when I want your next sale to be, because you're 10 to 20x of your risk in the money. And if you can do that, then all of a sudden I think that's gonna, that game plan adjustment will be the adjustment where every once in a while, because remember, all you need is every once in a while to throw in a really big winner. That's all you need. Honestly, if you're really good at managing risk, all you need is like a few really good winners per month that create a few big outlier upside days per month. And now all of a sudden you're profitable every month as a trader. If you can, and this goes back to the risk management, if you can consistently manage risk where you never lose more than your limit on a single day over the course of the entire month, and then you can throw in a handful of trades, a few really good days per month that are outliers to the upside, it's going to make up for all of the small losing days, and you're probably going to end up being a trader that can make money 10, 11 months out of the year. That it circles back to the math. It's the maths. That's where it's at. Yes, all the limit orders are done manually. From TT, following up on a question from a few weeks ago, how do you adjust game plans across instruments with very different movement profiles, such as TQQQ versus names like Palantir or Micron? I understand ATR conceptually. I don't look at ATR. But as the execution level, you have mentioned trading MU in roughly $1 increments versus TQQQ in 10-cent increments. Are you applying the same framework and effectively scaling by 10x? Or do you view these as fundamentally different vehicles that require distinct execution risk and target expectations? Sure. Um, One part of that I think is just knowing the stock. Uh, like I've been trading long enough, and I go back to a lot of the same stocks over and over and over again, and I understand those names really, really well. So I understand what's an appropriate game plan for me based on a stock that I've traded many, many, many times. And if anything, one of the places where I got myself in trouble this year, I lost a lot of money in SanDisk, WDC, and STX, and I had basically never traded any of those three stocks before. And after I was already in them, the way that they traded was just much different than I expected. The game plans that I was implementing were really wrong for the way that those stocks traded, and that was part of what really hurt me in those names. And that was because I just didn't know the names well enough. And that is a mistake and a problem, and something that I've learned from, and that I'm moving on from. So without a doubt, part of it is that I just know the names because I trade them often enough and watch them often enough. I while I don't have like very, very specific rules, I've got like general guidelines on how I approach what you're asking me based on how expensive the stock trades. Like, generally speaking, I trade most $20 stocks in the same way. Generally speaking, I trade most $50 stocks in the same way, most $100 stocks in the same way, etc. But also, generally speaking, I like a certain type of profile of a stock. Like, you hear me talk about it all the time. Like, I don't like trading consumer staples. I do tend to be fairly tech centric because they're higher beta with a lot of stuff that I focus on. So I've got these kind of generalities of what a game plan looks like based on the price of the stock that I implement. But also, it's a big deal, I think, just to know the name. And again, it was definitely a lesson for me in 2025 of the importance of knowing a name because I got myself in some names I didn't know and I got hurt in them. From Jackie, during those rough months you had, did you have anything psychologically you had to get out of? I'm not sure I understand the question. How did you detach from chasing the lost money back? Because that can be more detrimental for trading. I'm not sure I understand the first part of the question. Um, any not positions that I had to get out of, but just mental struggles. No, I guess, so, um, you've probably heard me say many times by now that I think that one of the best ways to get through almost any psychological issues that traders have is through good game planning. Um, so I think that through having good game planning, I'm pretty good at not chasing lost money. I don't really have that problem. I just kind of recognize that it is what it is, and I believe in my game plans. If I were to have one problem, and this, if anything, was the problem with like SanDisk and WDC and STX, like I'm saying, especially because I didn't know the names well enough, and I created game plans for myself that I implemented for those trades, and I didn't know the names well enough for the game plans that I was in, and therefore had kind of the wrong game plan. So the kind of problem that I guess I ran into with those stocks is that I had the wrong game plan for the stocks because I didn't know the names well. But because I'm such a deep, deep believer in my game plans, and that good game planning is the counter to all trading psychology issues and um, you know, chasing lost money like you're describing, uh, I'm extremely stubborn on my game plans also. And I think that that is where my problem came in with those 3 stocks that cost me so much money, is because I am extremely stubborn with my game plans because I think that they're the key to success in this business, but was implementing game plans that were incorrect for those trades, and I couldn't get myself to change the game plan, because I was already in it, and as you've heard me say a million times, don't change the game plan after you get into the trade. Don't change the game plan after you get in the trade. Well, here the thing was I had the wrong game plan for the trade, so therefore I needed to change the game plan, but I refused to change the game plan. And that refusing to change a bad pre-established game plan, and maybe it's never even happened to me before, to be honest, um, led to me taking like really massive losses in those things, where eventually it just hit like a point where I was like, you know, I need to just kind of close out these trades for career survival purposes based on where they're getting to, and just, stop myself out of them kind of just with a hard stop at a certain point, and no longer follow the game plan, and just, preserve capital, and then just kind of move on with my life, and move on with other trades, and move on with, what has given me success, and kind of rebuild from those losses. So, that is eventually what I did in them. If you combine those three names together, it is the biggest loss of my career, probably by far. Um, and it sucks, but whatever. It is what it is. Like I've said before, I've been trading for 15 years with T3, over almost 16 years with T3 now, working towards 16 years. I am not gonna ever be the type of person that, speaks to other traders and is like, yeah, all I've ever known is making billions and billions and billions of dollars. I've obviously had some really good successes in my career, but I have had multiple periods of time of learning through taking losses and learning through adjustments. And, just when you think that, you've made every mistake that you could possibly ever make in a trading career, and that's why you're as knowledgeable as you are, you find a new way to be able to encounter a new situation where you make a mistake that you didn't even realize was a mistake, because the the number one thing that I think enables my success is my game plans, and the detriment that led to my failure in those positions was my game plans. So, again, it just is what it is, and you know, today's a new day, and tomorrow's a new day, and just got to focus on doing the right things consistently moving forward, because that's how money gets made in this business. So, I think that's a really good note to end things on. There's no more questions in the VTF, but let me see what's going on in the YouTube. Nothing really happened in the YouTube, just a couple people saying hello. What's up, Scott? What's up, Frank? Good to see you guys. If you're in the YouTube, give me the thumbs up, and I will end it there. I think this is a really good meeting. So hopefully Mike Reed, when he gets off work, catches it and can, save it somewhere in one of his spreadsheets, because I think we tackled some really good stuff today, and it went long. Have a great night, everybody. See you all tomorrow.